Tesla just had its annual shareholder meeting last Thursday, and it was epic. Tesla is setting up now to enter its new phase into becoming the company that creates what Elon calls sustainable abundance for all of humanity. And if that sounds a little exuberant to you, well, we can go into the details and see that this is not just talk, but is backed by a very specific business model and specific enormous verticals of robots, humanoid robots, of autonomous cars, and of energy that allow this to actually become reality. And of course, in this video, we are going to look at the numbers and put real dollar signs on all these opportunities. But much more importantly, and this is a surprise, I'm going out on a limb and not just talk about the fair value of the company and the true value that we can expect over the next years, but also the expected stock price. And as you know, I make a difference between these two because it's normally very hard to predict when the market understands something. But I have my own thesis, what I expect the stock price to actually do. And we will look at my prediction and then also look how the stock price prediction relates to the fair value of the company over time in 2026. And it's going to be very interesting. So as a starting point in this video, I make it short and sweet. But as a starting point in this video, we are going to recap a little bit what Tesla is on a financial level and what the size of these opportunities exactly is, right? And I start with this quick overview here. When you look at EBITDA or share price of Tesla, let's look at EBITDA because EBITDA, the amount of money Tesla actually makes or will make, is very indicative of what's going on here. So we have three major verticals of the company. That is very important to understand. And that's what a lot of Wall Street analysts get wrong still. Even Kathy Woods and ARK are not factoring in Optimus. And as you can see, that's not very good to not factor that in because it's becoming nearly as big as the core business already in 2029 and then going through the roof. So you have to factor that in if you want to have a realistic understanding of the share price. But let's start with the three major things. We have core EVs, electric vehicles, cars, and energy. And we know in energy, Tesla does all these grid utility scale battery packs now, the mega pack, the mega, what do they call it? The mega mile, mega grid, mega something, mega blocks that allow not just reusable energies to be used in batteries, but to deploy Tesla's utility scale battery energy saving solution to actually activate and elevate the entire US, maybe Europe, maybe China, but the US grid to a higher output. I had a video on this. Once you understand that, it's a very big deal. The amount of batteries you can deploy in an entire nation like the United States directly determines how much energy you have at your availability and how much peak energy you have. It is actually the fastest way to build out the entire energy supply of the United States, which is surprising because people think of batteries not as energy supply, but energy storage. But the more you think about it, the more you understand storage is supply. Because if you have a certain peak output and you need a higher peak output in any city, let's say Austin, Texas, you build a data center. You need higher peak output. What do? Do you build more nuclear plants? You build more gas plants? You build more oil plants? You build more windmills or something or solar? Well, there is an alternative to all of that. You can build more battery storage. And then overnight you charge it. And at the peak you release it. And so with battery storage, you can double your peak energy. And the advantage of batteries is you can build these things with much less regulatory approvals, much less mess, and much faster. So if there's an urgent energy crisis or need, AI, data centers, batteries are your fastest path for a nation to beef up the energy supply. And Tesla is uniquely positioned in that market. There's only one other company, Cattle, in China that can do these things at scale, but Tesla actually has a leg up over Cattle and is American. So this is an enormous market. Long story short, that is why this thing keeps growing pretty aggressively. Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. But now let's get to the juicy stuff. Robotaxi and FSD. These are autonomous vehicles, the robotaxis, you know all about it. And here's my projections. Robotaxi will overtake in free cash flow and in EBITDA the core business by 2028 and then go through the roof and keep going through the roof. That's very important for discounted cash flow. So these are not marginal in the future, maybe happening things. But now we have clear evidence that this will scale like crazy. And in 2027, it will already be clear that robotaxi alone in free cash flow and in EBITDA and profit will outperform and outpace the core business absolutely dramatically. This is not in a distant future. This is happening now. And then guess what? Optimus creeping up. And this is actually a conservative model that I have here. Elon is way more bullish than me on the Optimus scaling, but I'm aiming at 1 million Optimus by 2030. So it's pretty slow. I think it will be faster, but this is conservative. And you see what's happening here. And then this thing goes through the roof. That tells you how big this future opportunity is. I also have this important chart where you see the share price, and the percentage of the share price that is a function of the discounted cash flow, 10-year looking forward discounted cash flow in each year. And you see that already now in 2025, the vastest share of Tesla's share price, in my model at least, is a function of future 10-year robotaxi discounted cash flows. And then you see how dramatically Optimus actually catches up and how marginal the core business becomes. So in order to understand what that means here, this is the discounted cash flow for the next 10 years. So if you look at 2026, that is the discounted cash flow from 2026 to 2035 for all of these. And you can tell how Optimus completely overtakes robotaxi in the 30s, 2030s. That is why the backwards discounted cash flow is so much more important for the stock price than even robotaxi. So finally here, you also see once we actually scale out into the 2030s, it becomes crazy, truly crazy. And you see that the core business plays no role anymore. It's all about robotaxi and Optimus. And we are talking about here 5,000 billion, 10,000 billion. So these are pretty serious numbers. These are 5 trillion, 10 trillion, 15 trillion. And at the end of the next decade, it gets very interesting. That is why I'm bullish on the stock, because each of these, by the way, have an unlimited TAM more or less, or at least a multi-trillion dollar EBITDA potential. Okay, what does that now all mean for the stock? And let's get into the interesting topics. First of all, on the projections on sales and everything, well, I didn't make too many adjustments because we were actually already pretty accurate after earnings and after the shareholder meeting. I just maintained my position here. Just to give you a little bit of an insight, what I think is going to happen, I am projecting 40,000 robotaxis next year. That puts me in, compared to a lot of Tesla fans, into the conservative camp. I'm saying, like, dudes, don't underestimate how complicated this is. The gating factor is not Cybercab production capacity. Of course, Tesla could easily do 200,000 next year if they wanted to, but they can't deploy them. Regulatory limitations are also not the real problem, in my opinion, because you have 7 US states, big states, Florida, Texas, and so on, Georgia, Arizona, and others, Illinois, where regulations are very low. You can just deploy these things. More or less, of course, there's some regulations, but it's very easy compared to California, for example. The regulations are also not the main thing. The main thing is capability. And what capability means is not just in theory if FSD is perfect, but FSD needs to be pretty perfect, 10x or 100x safer than humans. I think we get there in Q1 next year. Very soon, in the next 6 months, we are definitely there. But then you need the whole operations, right? You need to be able to actually deploy these things at scale and still guarantee nothing is ever going to happen. That's not easy. It's not trivial. So if we get to 40,000, we can be very happy, okay? And I think we will get to 40,000. It looks like it, we will. If we get to 40,000 autonomous vehicles, fully commercial, by the way, when I say 40,000 here, I mean 40,000 full-time equivalent vehicles, right? So we might get much closer to that early on. Maybe we have 4,000 already in April or something. But will there be really full-time equivalents? Full-time equivalent for me means 200 commercial miles per day. That's what the robotaxi should do. 200 fully commercial miles per day. That is a full-time equivalent. So when I say 40,000 gets us to that price, it means they need to run 200 miles. If they run 100 miles, you need 80,000. So effectively, we shouldn't even talk about the robotaxi fleet. We should talk about driven miles because that's the revenue driver, right? On the Optimus side, well, I'm pretty conservative here. I'm projecting 25,000 Optimus. We have clear leaks, by the way, that it should be much more. It should be over 50,000, maybe over 70,000, but I'm saying 25,000. Let's not be greedy. I'm saying we are scaling to 100,000, install base 130,000, and then we are scaling to 200,000 in 2028. Then we are scaling to 500,000, and then we are scaling to 1.2 million Optimus being deployed per year or in 2030 new in that year, bringing the whole install base up to 2 million. So that's all I'm saying here. I want you guys to understand that. That's all I'm saying. And on the robotaxi side, I'm a little more aggressive than later on, right? So I'm saying 40,000 deployed, then 200,000 deployed, because once you're here, then 400,000 deployed, and then 1.1 million deployed, and then 2.6 million deployed. Here is maybe where some people disconnect from me and say, Joe, you're crazy. 40,000 maybe, 200,000 maybe, 400,000 maybe. But how are you going to deploy 1 million, 2 million, 5 million, 10 million new robo-taxis per year? And I think people, so first of all, this is still a crude analysis because I did not factor out the semi-truck and autonomous trucking, which is an enormous opportunity. And in return, I got a little more aggressive here on deployment of robotaxis. So I think the reality will be, are we really going to deploy 10 million additional robotaxis per year in 2032? I think it's possible. But we'll definitely also deploy autonomous trucking, which is an enormous, crazy cash cow. So even if I'm exaggerating here a little bit, it will be more than offset by autonomous trucking. But until 2030, that's all pretty realistic. You have to understand that robotaxi is not just an opportunity for taxis and ride sharing and public transport, but the key for robotaxis is that they will replace car ownership at scale. I know a lot of, especially Americans and Australians and maybe Canadians say, that's crazy, Joe, how can you not have a car? But think about big metropolitan areas, think about Europe, think about China. I mean, a car is just a pain in the butt. Yeah, sure, if you're super rich in the future, you will still have a car, because why not? But it's just a complete unnecessary luxury in the future if you have these robotaxis driving around at like 70 cents a mile and you just order one. They're always everywhere. You don't need car ownership. And once you eat into car ownership, it becomes a huge deal. So you need to model out the future accurately to actually understand what's most likely going to happen. Okay, so we understand what's going on here. I want to now go into the share price. And for that, we're going to look at a different model here, which is this one. And this model, my favorite, is a model where I take these fair value share prices, right? And I project it here. So for example, what you see here is 2025. This is 2025. And you see my prediction. I'm saying the fair value share price for Tesla this year in December is $727. It's a little adjusted for some things. So Tesla should be at 727. Now, does that mean that I believe Tesla will be at 727 in 6 weeks from now? No, because the market sometimes doesn't care and doesn't get it. So I don't think this is the year where the market suddenly will wake up and understand this model. And so let's assume just some numbers here. I explain how this works. I put in 520. Let's assume we get to 520 end of the year. I don't make a hard prediction for that, but it's extremely possible. I think more likely than not. And what I can show you here on this beautiful little chart is what that all would mean in terms of the fair value. This red line is where we basically should be, right? Where the stock is fairly priced based on a conservative discounted cash flow model, 10 years looking forward, discounted back to today. The yellow line is the share price, the stock price, and the blue is the discount you get. So basically you can buy the stock at 500 or whatever end of the year, but it's worth 727. So you're getting that piece here as discount, which is pretty good, right? So that's your discount, the blue line, the blue bar, and it's just a tremendous discount. It's like 40% discount or something. We can actually look it up. Here's the exact number. The discount you're getting is 28%. So you get a 30% discount for free. Isn't that nice? Okay, let's go to 2026 because here's my prediction. That's what I wanted to share in this video because that is actually, I never described it like this. I think this is what's going to happen. The yellow line is the stock price, and this is going to happen to the stock price in my opinion. And what you see is the discount becomes actually a premium. In other words, I believe next year Tesla will be overvalued. Not for long, by the way, but technically it will be overvalued. The stock price will exceed its fair future value based on a conservative discounted cash flow model. Okay? Now you might say, Joe, this is bad news. Oh my God, should I sell Tesla? Like, yeah, you should potentially sell Tesla a little bit. if this happens, but when you look at the details, what do I mean? I mean, the fair future value of Tesla, if things happen the way I predict on the substance side, is $1,245. So my prediction is end of 2026, the fair future value of the stock will be $1,245. That's how much you should pay for it. But my prediction is that the stock will run up like crazy at the forcing function inflection point in May. I think it will be, somewhere around 500 and then go to 1,000, doubling. Once it becomes clear to Wall Street that Robotaxi actually scales, once we hit this 1,800 Robotaxi. I said this for a long time. So then you see this run up. That's my prediction. The discount turns into a premium. It will be slightly overvalued. But of course, we can already predict our Wall Street friends. They're going to say, well, oops, now we make a lot of money with free cash flow. Maybe this thing is real. But they will totally underestimate how quickly then Tesla can scale from 2,000 robotaxis to 40,000 robotaxis. So when that happens, that will lead to a complete aggressive repricing of Tesla. And that will lead, and here comes the number, you saw it on the thumbnail. I believe Tesla will exceed $2,000 per share if we deploy 40,000 Cybercabs next year in Q4. Because that will blow people's minds and then all bets are off. And then people will say, wait, if they can deploy 40,000 autonomous cars, effectively you turn the entire United States into an autonomous infrastructure. That is completely nuts. Where does it even stop? Could it be millions? And then people go crazy and the stock goes crazy. That is my prediction, and that might happen in Q4. Of course, it's all very speculative, by the way, but normally I'm not so much off. So I think it's more than realistic that we get into a crazy run-up. And if that happens, it is pretty much guaranteed that the stock price will exceed its fair value. It did that in 2021, by the way. And then we are sitting there on an overvalued stock. Obviously, I'm not going to complain, and you shouldn't be complaining, because that means every single Tesla stock will be worth $2,000. And that would be very good for us. Let's see what happens. I'm pretty sure something like this will happen if we deliver our 40,000 Cybercabs. If it happens, well, you have to check in with my channel and we can discuss in Pioneerlands what that actually means, if you should scale back, if you should sell. And at what point in 2027, the red line will actually catch up with the yellow line, and how much the yellow line has to drop back. If it has to drop back, or how long it has to hold at 2,000 for the red line to actually catch up. That is a different topic for a different time. I just want to disclose what I think is going to happen in 2026, assuming we hit our Cybercab production and deployment targets, which I think is more likely than not. So interesting times ahead. Let's see what we do this year. Year-end rally may be coming. I hope that was interesting, and see you next time.